Hello, welcome once again. My name is SeeWing Yee from the Yee Real Estate Network, and today I'm providing housing data for August 2022 by Redfin's weekly data information. So you're getting it real time. And today the topic will be Orange County, California. All right. So without further ado, let me share my screen. And right now I'm gonna go over the the top four nations ranking in medium home price and and what's the salary is needed to qualify to buy a primary home. So number one rank is San Jose, yeah, in which where I live in the Bay Area for the past 33 years. And also second on the list is San Francisco, third San Diego, and fourth Los Angeles. So four of the top listed market, housing market, or no surprise, are in California. So Northern NorCal and SoCal. All right. So today I'm going to talk about Orange County, and you'll most likely will require. It doesn't say Orange County here; it says Los Angeles. But suffice to say, the median price in Orange County is have easily have exceeded $1 million for a single family home. And the salary range you will need is at least 149,000, probably more, and with 10 to 20% down payment. So you need like $250,000 in down payment just to be able to buy something in Orange County. So anyway, so that's what you're looking at, right? So which is mind-boggling, but we all know Orange County is one of the most desirable place to live. And although we've been hearing, out-of-state migration from people from California as a result of their remote work capability, people migrating to a lesser, a lot affordable markets such as in Texas or Florida, and also to neighboring Idaho, Boise, and Las Vegas and Phoenix, Arizona, what have you, which is fine. The cost of living in those areas is a lot lower. But with that said, on a historical basis, you know, people still want to live in Southern California over the years, and they will continue to do so. Yes, people have a lot of money these days to be able to afford to buy a home. I would have to say 50% of the population in California, especially in Southern California, especially in Orange County, are probably renters. So they're most likely paying anywhere from $3,000 for maybe one bedroom apartment. But if they want to rent, if a if a renter were to rent a three-bedroom, two-bath in Orange County, they probably have to pay $4,000 to $5,000 per month, and they can do it. They have their income, but they don't have down payment to buy. They're not ready to buy, so they'll be renting for a while longer. And who knows, right? Some renters are thinking they want to wait until the housing market crash in Southern California, 40, 50, 60% before they'll buy. Well, guess what? Those people might be waiting for a long, long time to come. So the big picture is, without, as I'm going to go over the detail very shortly, there's still a severe shortage of supply of inventory in Orange County, and the demand is still high, not as high as 6 months ago when the interest rate was 3.5%. So at 6%, we all know that the demand has decreased to a point where there's a more negotiation power for the buyer. So let's go over that. Okay, let's go over those kind of things. So for the next 20 minutes or less, let's go over what's going on with the Southern Orange County market, and then you can determine after this presentation whether you individually feel that this market is going to crash, or it's going to have a bubble situation or a correction. You decide. Feel free to place a comment in here at the bottom of my video. I would love to hear your comment. I will respond back to you. So like I said, I live in San Francisco Bay Area for the past 33 years. And I purchased several homes in the past several decades, so I know what's going on, and I'm a licensed real estate broker in California. Although I'm not a realtor. I mostly my real estate network, we help mostly California investors to buy out-of-state turnkey cash flow properties in affordable markets. Most of them are in South and Southeastern part of the US, but let's not talk about that. You feel free to subscribe to my video channel, and better yet, you perhaps wish to put down your email for our website for you can get free weekly newsletter about investment opportunities out of state. So without further ado, I'm using the Redfin. I'm covering many metros, many cities for foreseeable future using this platform, Redfin platform. So I have knowledge about many markets from high level, that is from 20,000 foot high level. I don't know the specifics of the neighborhood, what have you, but I have a network of real estate people I work with over the years in many markets in the U.S. Who can provide me with those kind of data. So anyway, from a high level, let's discuss Orange County. The median price as of this past May was as high as 1 million. By the way, Orange County have 1 million people, right? And there's still, as far as I'm concerned, an extreme, severe shortage of inventory. And the demand is still pretty high because you're dealing with people who have money from all the world, and over the US and over the world, still want to flock into this area for obvious reasons, weather and lifestyle and amenities, etc. All right, so let's go over over the past 3 years, 2019 to 2022. And 2019, the median sales price in Orange County was a mere 723. You fast forward three years, from 723 all the way to more than 1 million. So we're talking skyrocketing increases in prices. So for primary home buyers that have purchased in the past few years, up until early this year, you just received a large windfall, right? So congratulations to you, and the rest of you are staying on the sideline. That if you have the capacity to buy, right, think long term, buy as a primary home buyer. So that's fine, as long as you can live there for 7 to 10 years or longer. Now, for real estate investors, I would not recommend to buy at least single-family home in the Southern California market because the numbers does not make sense, right? Your rent, whatever you rent, you're charging is not going to cover your debt service unless you're paying all cash to buy, right? I mean, if you put in 25% down payment on a $1 million home, single family home, as an investment and rent it out, you're not going to cash flow at 25% down. You may cash flow at 60% down, but then again, it's very costly. So as an investor, unless you buy a multi-unit in Southern California, which is 2 million, 3 million, you can get a 5% cap rate. Yes, you can put down 25% down. You may cash flow a little bit, but this market is primarily for high-level, upscale individuals that want to buy for owner-occupied purposes mostly. All right. So with that said, so again, 723 3 years ago, median price to now 1 million. So we're talking very systematic increase of prices due to low inventory and high demand at 3%, 3.5% interest rate up until a few months ago. So things have changed. So you can see the gap between 2019, right? 3% growth year over year, 2019, 2020, 1%. Then skyrocketing prices have increased at 22% from 2020 to 2021. Then another 20% from 2021 to 2022. We're talking like almost 50%, 2 years skyrocketing of appreciation. So, so then some of you are wondering, is 1 million here in April, right? Start date now is 985K. So what's the decrease? The decrease is due to home affordability issues. With a higher interest rate, people can afford at a lower price point. So, most likely based on the short-term trend, the people there, the reason why it's 95K right now, once again, is the affordability factor, the monthly payment. People cannot afford at this price at 3.5% interest rate. They can afford this price at 5.5% interest rate to 6%. Does that make sense? Right? So that's the median price. Now, with that in mind, let's go over the new listings, right? New listings are important to see the activities in the local market year to date. So, in the area of Orange County, California, with a 1 million people population base, the new listing is not even 590 homes, right? Got listed this recent week, which is a big decline from a few months ago, again, as a result of the interest rate. So there's a 24% drop in listings on a year-to-year comparison from 2021. So that means that most sellers in Orange County are not willing to sell the houses because most likely they're sitting, they are locked in at 3.5%. Maybe they have refinanced their home a year ago, and they're not gonna sell their home to buy another home at 6%, double their payments at a higher price even. So it is a locked-in effect. You know what I mean? So right from this initial data, it tells me that there's still a historical low supply of homes in Orange County relatively to the modest demand. All right. So it's a news listing. So let's take the next category. Then we look at the new listing median price, right? New listing is pretty stable. It's at 1 million, 14% growth year over year from last year. So good, still double-digit appreciation year over year from last year, 2021 until now. So it's a good sign, right? Demand is still pretty high. So, and then the next category that we should look into is the median days on the market before the contract is done. We're talking 35 days, so a little bit over a month. So it's pretty decent. It's okay. So obviously you're not getting any multiple offers anymore. Not 20 offers per house like we did, in the past recent pandemic timeline. So yeah, you may get there are some neighborhood. I know Orange County is so large. It's a neighborhood to neighborhood situation. Every location within the sub area is different, right? I mean, one neighborhood is doing better than the other neighborhood, but suffice to say, the prices are very, very high. So 35 days is fine to close escrow on a medium days of market. So nothing look out of the ordinary there. And then number of homes sold recently is only 473, right? I know it's a week to week basis. So number of homes, new listings are higher. Number of homes sold are quite low. And year over year from last year is a 34% decrease in the number of homes sold from last year, 2021. So again, most sellers are not putting their house on the market because for the reasons that we stated. And then let's look over the price drops. Now I know this is going to happen. Many markets we're seeing similar trend. This trend you see looks like is very severe in terms of uptick in price drops. Now, the definition of price drop is not what you think, right? Because a lot of sellers are not getting the memo based on the higher interest rate skyrocketing from 3% to 6% or less. You have less demand, right? Because fewer people are able to afford a home more than $1 million, even in Orange County. So we've seen 6.5% of active listings with price drops. So the reason why, I mean, most likely that most sellers, they overprice their home to begin with, not understanding the 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 demand has subsided. So ultimately, their homes sit in the market for a couple of weeks. They're not receiving any offer. Maybe their homes are not priced correctly. They overpriced relative to the demand, and also the condition of the house may not be favorable. So, and so that's the only reason. So it remains to be seen how much longer the price drop will occur. The price drop, once again, is list price to actual sales price. So hopefully in the next few months down the road, as we enter the third quarter 2022, the sellers are finally getting the memo, so they're gonna list their homes uh, in a fair market value situation. So you will not see this drastic decrease in price drops. Again, it doesn't mean that the value of homes are dropping like flies. No, it's not like that, right? So keep that in mind. And now, what else should we do now? Did I mention medium sales price? Medium sales price is 985K. So again, because people cannot qualify as much as they could a mere 6 months ago, I think most buyers can only qualify for 985K in this case. So nothing to be concerned about based on the short-term trends. And now, another thing we need to understand is before I will click into the month of supply, many of you know, if you know, if you understand the market, 4 to 6 months is pretty much a balanced market where, you know, where the seller market and the buyers are having a equilibrium. So 4 to 6 months. So let's look at the month of supply for Orange County. And the month supply is 11.6 weeks of supply. So divided by 4 weeks per month, not even like a little bit more than 2.5 months supply of inventory. So this tells me that it is still a very strong seller's market. It'll take a lot more transactions, a lot more inventory to come into the market to achieve a 4 to 6 months balanced market, right? You guys agree? If you do not, please feel free to comment below on the description. I'll be more than happy to address your comments. But it's not going to happen anytime soon. Well, we'll see the 4 to 6 month supply, depending on, you know, what's going to happen the rest of this year and beyond. All right, so still a severe shortage of homes, a little bit more than 2 months, and so therefore the sellers still is still a very competitive market. Oftentimes, what I hear is that there are maybe 2 or 3 offers per house in Orange County. That's my take. All right, and anything else I need to go over? Let's go over average sale to list price, right? Based on the final list price, what was the actual offer, to see whether the offer that was accepted or at list price, below list price, or above list price. So let's go over this very important link. Click, which is right here. Right now is average sales list price year to date, August 2022, is at 1. That means pretty much the final list price pretty much equals the offer price by the buyer, right? So as opposed to based on today's interest rate, which is a lot higher than back in March and April. As you can see, back in March and April, the actual sales price is higher than the list price. That means the multiple offers was happening the first quarter of 2022 based on a very low interest rate of 3.5%, which is pretty obvious. And then the interest rate spike happened, and now so the sellers are not getting the overpriced listing that they tried to put. So so in a way that's good, right? I mean, we cannot have we cannot sustain this skyrocketing double-digit and triple-digit appreciation that we have seen in the past 18 months. It's not sustainable. So in a way, it's a healthy market. We've seen a healthy market. We've seen a reset. We've seen somewhat of a balanced market. So I wouldn't consider these trends or we're seeing any kind of bubble or correction, or for sure not a crash, because the Orange County market is so desirable. You have people from all over the world. You have people with money. The economy is doing very well. There's a lot of jobs happening in Orange County in Southern California. They are the aerospace industry. There's a high-tech industry. There's an entertainment industry. Then there's transportation, logistics industry. Then there's retail. Then there's travel industry. So Southern California is a very diversified economy. So still very, very desirable to live for a lot of people from all over the country, over the world. Still very much desire to live in sunny Southern California on a historical basis. So as I conclude this, anything else I could think of that you guys need to know about? So I think that's pretty much it, right? I didn't miss any significant trend graph. So my takeaway is this, that the higher interest rate has decreased demand. So there are more opportunities for first-time buyers to buy. Even with 10% down payment, 20% down payment, there's not as much competition because a lot of people is on the sideline. So who knows what's going to happen? So it's a normal reset, healthy market going on here in Orange County. That's my takeaway. And if the interest rate maintains itself like 5 to 5.5%, we'll see good activities, good housing activities, especially as we're moving to the third quarter and fourth quarter 2022. We're going to see more sales activity right now. A lot of people are on vacation. They are resetting themselves, right? They are waiting for things to happen. There's still a lot of money out there, but people still have money, especially in California. So they're going to come back. People with the interest rate or decrease below 5%, maybe next year, we may see a frenzy housing activity. We see people coming back into the market. There will be a lot more competition right now. It's an opportunity for people that got priced out of the market, that could not compete with the multiple offer situation happened in the recent past. You guys can pull the trigger right now if you qualify. Again, 5.5%, 6% interest rate from a historical basis is still pretty low, right? Think about back in 1980s when the mortgage interest rate was as high as 18%. Think about that, right? So don't freak out just because the interest rate has increased 100% from 3 to 6% in the past 6 months. It's not the end of the world. The interest rate itself will not cause the housing market to crash or to enter into a bubble or correction. The economy itself is the key driver. So as long as we have a good, stable job market, which we do, even at a mild recession that it may happen, there's a 50% chance it happen. Housing, as long as there are jobs still available, as long as the unemployment rate is still below 4%, we expect housing market to continue in a very healthy pace. All right, so that's my takeaway. So again, I'm welcome any kind of comment you have below. I'll be more than happy to answer them. But again, the Orange County market is very, very expensive. We all know that, but everybody and their brother want to live here still. So it's a matter of perspective. Thank you so much. Hopefully you enjoyed this video, and I will put out additional videos about other markets everywhere, all over the country on a weekly basis. So follow my channel, click like, subscribe if you want, and better yet, enter my website, newsletter database. You can put your email, then you will receive great monthly email of real estate investment opportunities in different parts of the country, buying out of state. turnkey cash flow properties in affordable markets. Thank you so much. This is SeeWing Yee from the New Listen Network. Have a nice day. Goodbye.